So the second best thing that drops in my inbox every single month is a lovely little company called CoreLogic. I don't know if you've heard of this little backyard shop, Charlie. It's one little one-man band.
Sounds like they sell data, Grant. It sounds like, are they like some sort of tech company in Silicon Valley?
Well, CoreLogic's huge, massive company. And for anyone who doesn't actually know, CoreLogic just has data on all transactions that happen in the Australian property market.
Come on, man. Everyone knows who CoreLogic are. It's the biggest player in the game.
Hey, this is what, episode number 2. I'm dropping in. Like, I'm just dropping it in. So interesting. So every single month they come out with it. Charlie, I found some pretty interesting things when I was reading through this, but I'm not going to steal some of your points. I'm going to make sure that I can filter some in. Do you want to hit us with some of your top points or takeaways, I'll say, from the CoreLogic?
Yeah, the first thing I want to acknowledge is the name of this report, the Hedonic Home Value Index. What a name.
Do you know what hedonic means? It's the way that they weight. If I'm correct, it's like the way they weight the statistics, but it's also the most valuable.
It just feels powerful
because domain uses a composition adjusted stratification index. By the way, Charlie, just in case you didn't know.
I'm literally looking this up. It is. It's a hedonic concept dates back to the Greek philosophers who argued the ultimate goal of life ought to be to maximize pleasure. I kid you not, I'm reading that off right now.
It's fantastic. So yes, they have concepts.
I don't feel like that's the meaning. I feel like that's something.
We'll go with it. We'll go with it. So yes. So I love the hedonic home values index report.
I actually really love this report. This is one of those emails I actually look out for. So for anyone that doesn't know, CoreLogic release this report every month, and what they actually do is they give some really interesting insights to what changed in property. So for the month, like how much did things go up and down as a growth percentage, what's changed in rents, as well as insights and things that they suggest. It's completely free. If you don't get that, of course, get our newsletter first. That is the more important one.
Banger.
But secondly, I think this is a really interesting one to read and go through. So I did a really good read through of this like yesterday, and I actually reread it this morning.
Did you print it and read it, or did you read it online? That's like
I'm all digital. I'm actually loving things on my iPad at the moment and being able to highlight. It's fun.
Fair. I printed it, but sure.
Can I share the thing that like most notably hit me? Like,
all right. We're going this top one each. All right, you go.
All right, so the national decline from the peak is 7%. So I believe that was like early in the year, January, February. So from the peak of the property market to today, nationally, prices have fallen 7%. Now, like, and I looked at that and I went through it and I'm like, scrolling down a little bit further, and then you get the state by state breakdown. And then what was fascinating to me is that 7% is just so skewed towards particularly Sydney and then Melbourne. So significantly skewed. So if you had property in any other state, that one metric is just, I'll say it, complete bullshit.
Totally.
Can I go more interesting?
All right, I'll let you. Go on.
So, and then I scroll down to the page 7 of the report. Right, so I've looked at this like, peak to trough per state, which I thought was really interesting. And then they've even got peak to trough. They've even got like what houses versus units have done in each state as well, which I'm not going to go in deep to that on this because I think there's plenty of good operators out there that regurgitate this report on a YouTube video for your consumption. But if you go down to page 7 of this report, what they've actually done is a breakdown of the top performing, what I'll call, they're called SA3s, but think of them like council areas, right? All right, so they've gone down, and then for each state, they've listed the top performing council areas for the year, right, in the same thing. And I'm like looking through this, expecting them to be down, and it was really shocking how many of them are up for the year, and then how many of those are in my portfolio.
All right, so let me just retrace this for a bit. So you see, according to CoreLogic, prices dropped by 7% in average.
Yeah, Graham, I lost 7%. Oh, I'm flipping a desk. I'm hitting a table. This is bullshit. I'm down 7%.
And so then you've applied your untrustworthiness to Philip Lowe to your concept and gone, nah, I don't trust it. So you've gone down to go, well, where do I have properties? Let's look at the states. So filter it out. And you're like, woohoo, thank God.
I'm not down as much. This is evening out. I'm like, I'm not down 7%, although I will give you the exact number here. If you go to state level, if you just did my stuff by state and I was to look at it, I think I netted out at about 0, just to be clear. So I've gone from losing 7% to I'm like, oh, well, I've got properties in Western Australia and Queensland. And like, I do have some in Victoria and New South Wales that have dropped a touch, just to be clear. But I'm like neutral now when we've gotten to this part of the report.
How amazing. You're the type of guy that like when you have a cough, you like search for the symptoms of the cough and then you're like, I got cancer. You just get that reading and so you get to like page 5 and it's like, cancer. Like
this does sound like the conversation we had about do I have a hernia the other week, I will say, which the doctor did laugh at me when I was in the room. But let's not discuss Charley's health issues there. But there may or may not have been I felt I might have had a lump. It sounded like a hernia. Grant lulled me into the belief that it might be a hernia. And then I'm at a doctor's office and she's laughing at me because she's like, you can't even get a hernia in that spot. May have happened. Anyway, looking to this, I'll loop into the last part. So again, reading this report, and it's so fascinating. I've gone from down 7% to now I'm looking at the state level and I'm like, ooh, I'm okay. I read this bottom part here and I'm not just okay. I'm actually up for the year significantly. So I'm going to read these ones out.
Bottles be popping, like run around the house.
I'm actually going to celebrate this year because I think this is really important for every property investor is that if you are someone looking at the state values or national levels, and that's how you're measuring things, I think you're missing out. So I'm going to go through these one by one. My WA property, so I've got a property in Western Australia, that council level, and I know the suburb is even up a bit higher, but the council level up 9% for the year. Next one. I've got a property in, I'm just going to be vague in where I say these here. I'm not going to give out my exact locations because I don't want anyone to try and invest in based on what I say. But I've got some properties, I'm just going to say Queensland north of Brisbane. So let's say Sunshine Coast and a little bit up, that whole stream there. I've got one that's up 9% as a council area. So again, I've just had 2 that are up 9, but the national fell by 7. I've got another one in Queensland where that council level is up 14%, and then another one that's actually up 18%. And that's this year. That's ridiculous. Not like over the last bit. That's a significant change. My other properties in New South Wales and Victoria have fallen less than 5%. It's actually like 3. So for me, if I weighted this out as a whole thing, I'm actually up to over 10% for the year on a growth aspect.
For my portfolio, which is a little smaller, so I've only got exposure in a couple of states, I saw similar. I saw 9%, a 12%, and then a 7%, all growth for the year. And I'm like, oh, that's interesting. How, because I did exactly the same thing you did, which was, it's down. Bullshit. All right, let's go and have a look at the stats. Even so, like I got revals done, because I did a refinance just previously, like last week. They're all being validated based on revaluations as well. So it's not even speculation. Like it's like, no, this is real.
This is just crazy. The way I've started to think about this now, and I know I've heard many other commentators, and I don't want to bang on about this point, but it's like if you were to invest in the S&P 500, could you accept that if the index was down 10%, that there would be companies within that are actually up 10%?
Yes.
Like not all companies are going to be down. So I think it's clearly proving a true concept here, yet what we see when we look at some of these reports is like you've really got to filter into this. Like you've really got to be able to drum down and look at these things individually. And like you made a great point earlier about like weighting the news. I think you've got to pretty much look at national dwelling values and just go probably the worst metric to measure success in overall.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.